What's going on, everybody? My name is Homero Corona. If you guys have followed me, I started my real estate investing journey in 2018, and I'm sitting here with a really good friend, Joe, who's actually one of my business partners in a couple of projects that we're working on. I'm really excited to share with people. In this current market, as you guys have realized, that the interest rates have gone up significantly over the last couple of years, and it's caused a burden and actually an issue for a lot of people. But we're going to be talking about how you can take advantage of this market and actually get and negotiate interest rates that are actually lower that you're going to be able to get at the bank. One of the things that I want to talk about today is how there's landlords right now that are dealing with a lot of issues, Joe. Let's really quickly talk about some of the issues that landlords are dealing with in this current market.
Well, the biggest thing is they've got money tied up in their property, and if they add up all the numbers and subtract out the expenses, they're really not making much money or much of a profit on that money that's tied up. Their biggest bet with a rental is that it will appreciate in value over time and they'll make money that way. But other than that, I don't see how they make money.
Yeah, I mean, over the last, 10, 15 years, people had a lot of appreciation, but as of right now, I think we're dealing with a lot of stagflation, right? A lot of people, are dealing with situations where their properties is maybe not really going up, but some of the properties are actually going down if they bought that property recently, right? So as you mentioned, landlords are dealing with situations where so many things are eating away at their cash flow, right? Let's talk about one of them, insurance, right? What has happened to insurance costs over the last, 3 years? They've skyrocketed, right? We're hearing stories of investors where they're not only going up 2 times, but sometimes 3 times what they just were quoted or had on that same property just a few years ago, and that's for so many reasons, right? Material costs, labor costs, so many situations. That's just one factor, right? Insurance.
Taxes are not going down.
Taxes is a huge one, right? I mean, the one situation that we're dealing with right now with a particular landlord is, and this is the conversation that you guys can be having with these landlords, is helping them understand and communicating where right? You want to let them know that you know what's going on, right? And what I mean by that is letting them know, hey, based on the information that I've gathered on this particular property, I see that taxes are X amount, right? The second thing is that you're going to have an increased insurance cost. So based on my history, based on the value of this property, to me, it seems like you're spending about $700 a month just on property taxes and insurance, right? So sometimes people may get let's say $1,600 in rent for a property. That doesn't mean that they get $1,600 that goes directly to their bank account. No. They have to factor in that $700 that's going to go to property taxes, that's going to go into insurance, and then there's also going to be some property management, and there's also going to be some unknown situations where sometimes an HVAC may go out. So there's all those issues that they're dealing with. So that's the exact conversation that I had with a recent landlord where I said, hey, I understand that you're getting X amount in rent. I understand that the value of the property may be this. In order for me to make the numbers work, I need to get a favorable interest rate to being able to still cash flow, because if you're trying to give me market rates or a little bit higher than market rates, the numbers just won't work, because my monthly mortgage payment may be $1,800 or $1,900 and I'm renting the property for $1,650. I'm losing money. It just doesn't make sense, and they understand that. So the landlord said, hey, I want to make sure that we create a win-win situation. I don't want to be the landlord anymore. I don't want to be getting phone calls every 5 minutes. Those were the exact words he said. And I want to make sure that you're successful and you can cash flow, right?
There's another aspect to rentals, and that is the more rentals come into a neighborhood, the quicker the neighborhood starts going downhill. So from a social aspect, making it possible for homeowners to purchase a property that they otherwise wouldn't be able to qualify for is really a big part of the note business. Owner financing, or private financing if you will, is critical in the social construct, that's a pretty big word, social construct of building up a neighborhood.
One of the questions people that are watching this are probably asking themselves, if you're new to, owner financing and, and asking yourself, are there people right now in this current market that have 10%, 15%, 20% down for a down payment? And I want to let you guys know there is a lot of those people. A lot of those people sometimes are small business owners, right? They take advantage of, tax, write-offs. So on paper, sometimes it seems that they only make, let's say, $60,000 a year. So for them to be able to buy and qualify for a mortgage, they can't really go to the bank. But for us, what's important for them is, do they have the down payment and can they afford the monthly payment, right? And I'm telling you guys right now, we're currently selling a property where, they're putting 10% down. A lot of times they're putting probably on average about 16, 17% down as a down payment. So there still is a good amount of people out there that are having $30, $40, $50, $60,000 for a down payment, and that are willing to pay a little bit of a premium on the interest rate because nobody else is giving them a shot, giving them an opportunity.
Right. Banks tend to hate the income stream when it's doing this. And some of these people may make $15,000 in 1 month, but then nothing for the next 2 months. We look at the average load of their income stream, and if they can handle it and they have a proven history of paying their rent on time, they're gold to us.
Yeah, and just to kind of reiterate what we talked about as far as the interest rates, right? The interest rates, you may say, well, why would a landlord want to give me a favorable interest rate? Well, number one, because he wants to make sure that you're able to cash flow, but something that you can trade off, right? There's always trade-offs, right? You may go to the landlord and say, hey, if you can give me a favorable interest rate, I'm willing to give you a little bit more for your house. So you may be asking $200,000 for the property, but I'm willing to pay you $205,000, maybe $210,000 in exchange for a little bit lower rate. And there are trade-offs, right? Somebody says, well, I'm gonna get more for the house, I'm okay with that. And I want that person to be able to cash flow because I don't want this property back. And if you're making money and being able to still have, cash flow and still being able to put aside for unforeseen expenses, then you're typically going to be very successful and you're not going to have to worry about getting that property back, which as a note investor, that's what the reason that we're getting into the note business is because we don't want to get those phone calls and having to deal with situations. The thing about note investing is if it's structured and done properly, it's more of a set it and forget it. You do all the underwriting, you do all the documentation, all the paperwork once, and then you get paid every single month for the next 5, 10, 15, 20 years, if done properly.
This is absolutely not subprime lending like happened in the early 2000s. These are good, hardworking people, and we're giving them a shot at home ownership. And the reactions that you get at closing when we sell these properties are truly emotional gratitude that they express, that somebody would take a chance on them to have their own home.
Yeah, I mean, so at the end of the day, it all comes down to creating win-win situations for everybody, to being able to solve problems, right? The better you get at solving problems, the more money you're gonna make, right? There's a quote by someone very successful. I don't know exactly who said it originally, but it says something along the lines of, your income is gonna be in direct proportion to the size of a problem that you can solve. And what are we doing? We're solving people's problems, right? And landlords right now have big problems on the horizon, and we can go out there and create a win-win situation, solve it, structure something that is a win-win situation. So I encourage you guys, make sure that if you haven't already, click on the links. We have a couple of websites, a couple of free resources for you guys that want to learn about some of the important things about note investing, note structuring, and then we also have live classes that we're doing on a monthly basis here in North Texas, in DFW, in McKinney, and we'll put a link below. We're also going to be doing a webinar here in the near future if you guys want to be a part of that. So I appreciate every single one of you guys for tuning in, and we'll catch everybody on the next video. Thank you, Joe.